attendees. All right, we are ready to rock and roll. This is Trader Travis. I have my Success Academy co-trainer Peter again with our weekly recap. Thank you everyone for your feedback. Let us know you absolutely love these and you want us to do more. And so today, we're going to start off. I'm going to let Peter take the lead again. And when I take the lead, I'll cover the general market, answer a question from a member, Success Academy member, and then kind of give a quick rundown of my trades. And if I have time, I'll place another trade live today. So with that being said, let me go ahead and turn the floor over to Peter and give him controls of the computer.
Okay, thanks, Travis. Hey, everyone. Thanks again for joining us. So let me bring up my spreadsheet here. You see my spreadsheet, Travis?
Yes, I do.
Okay, so those of you guys that love my colors, now I've changed it a little bit more, so I think it makes it a little easier to show you guys what I'm doing week to week. So if you guys remember last week's recap, oops, let me start my timer here. If you remember last week's recap, I think originally I generated 18 or 1900 for the week. You see that number changed, so this is 14 through 21 here. It changed a little bit because I ended up placing this covered call on NVDA. I think I placed it like right after we did the recap. So that bumped my revenue up. Now, I put little notes in here, over here. You guys can read them on the replay, pause the video, whatever, but I'm not going to read through them all. Basically, all these trades, with the exception of this one right here, have expired. So all that revenue is, either way, that revenue is there. The only reason I point this one out is because it's the only one it's going to get assigned this week. So I'm going to end up owning 1,500 shares of Macy's. I've been assigned on my last like 3 cash secured puts for Macy's, which is fine. I'm covered. I am 500 of my shares are protected because I have a protected put, so 10 or 1,000 of my shares are not protected. But based on what I've earned for Macy's, I'm in good shape, and I'm not too concerned about it. These are my trades for the week. Now, I changed things up a bit because of our webinar we did the other night for the Success Academy. I've been basically selling 22 contracts of AT&T because I calculated on my account that I would have risked just over $74,000, I think it was. That's what I was willing to invest in AT&T, so that's how I did my cash secured puts. And then things that we kind of talked about on the webinar, I know Travis talks about this. Cash secured puts are one of the worst ways for weekly income. So I just kind of wanted to throw that out there and do that the next 2 weeks and show you how that is. So you can see what I did was I took that same dollar figure, that 74,000, I calculated our 210 formula into it. So I knew my risk parameters, and then I determined how many credit spread contracts I could do. So I determined based on my risk parameters I could do 60 contracts, but instead of doing all 60 this week, I did 30 this week and 30 next week. So you can see that revenue there. So 630 this week, it generated a 990. Interestingly, this one here generates more revenue and it's less risk. I think it's like a risk of $400. The best part about this is instead of risking $74,000, even though we've talked about this, but instead of having $74,000 invested for that kind of income, I've only risked about $1,200 or $1,400. I think that's the total. That's the 2% on the account. So it just shows you the difference. So it kind of proves Travis's point yet again. Moving on here, I've got my 10. Those are the 10 Macy's contracts. Now, I was assigned at 37. That's my price point. That's my cost basis. You'll notice that covered calls at 35.50. So this is a trade I manage. Okay, I don't want to be assigned. I've already calculated that risk. That max risk or max loss for me is basically $250 a share times 1,000 shares. So you guys can do the math. Based on all the money I've made off of Macy's, basically I would lose $1,500, but I'd still be a profit margin of around, I think it was $1,600, because my profit margin is really high with Macy's right now. So, but I'm managing that risk. But even though I'm managing this trade, not managing the risk, I'm managing the trade, meaning I'm looking at it. I don't know. I could get assigned at any given time, so I've already calculated that in as max loss. Just understand that. And remember, anytime you sell an option, there's no guarantee that you'll be able to get out of it. You could get assigned. And then NVDA, I was assigned again because NVDA has dropped. So I sold 3 covered calls just below my cost basis. Again, I was assigned at $37. I did it just below my cost basis, one, because I calculated the run-up NVDA would have to have over the next 3 days. And that's certainly possible because NVDA can go up quickly, but based on what it's doing and based on the templates we use, it's not looking good like it's going to rebound and get above $36 before Friday. But again, I'll manage that trade. Worst case scenario, if I lose, you know, $100 is basically what I'm losing there per share, or $1 per share, sorry. So I'd lose 300 bucks. So based on all I've made, I'm in good shape. So my total revenue for the week is $25.31. I've changed my thing up here just a little bit to kind of show you this is my return for the week. So I didn't recalculate over here because I've been averaging about 2% a month. But this week I did just less than 1% of my total account value. My total revenue for the year is $13,312, although I've been trying to calculate that with my Thinkorswim and it's a little off and I can't figure out why, but the good news is it's a little off on the I'm under calculated somehow. TD Ameritrade is saying I earned more, but I don't know how that is. So anyway, that's it. Those are my trades. That's my weekly recap. Kind of changed things up. Some of the stocks I'm going to look to track over the next week or two are MasterCard, Visa, and I think ADP I checked too. I was just doing some of the hot stock formulas, so those were some of my upcoming tracks I'm going to do. So that's it. Did I cover? Oh, one last thing. I'm sorry. I didn't cover this, did I? Let me go to my Mad Money account. So I did, on my Mad Money account, I threw a little trade in there that's kind of like a bonus trade for me. If it works out, this is fantastic, and if it doesn't, oh well. It's not the end of the world. That's a vertical credit spread on Apple. So as long as once I hit an 80% return, I'll buy that back. And then I did sell a MasterCard 3550. This is below my cost basis. So again, I'm managing that. So I'm looking at it each day to make sure. Right now, MasterCard, same thing. Looking at the chart and looking at our templates, it's not doing well. It's not looking like it's going to rebound above that 3550, but I'm managing it to make sure I don't get assigned or everything possible to not get assigned. If I did, I could just change this figure here, and then you would see you see how my 646 and my return is 15%. Not too bad. So, but I manage that. Hopefully I won't get assigned. Okay, that's it. Sorry, I went way over. My bad.
Oh, no, I don't have much anyway, so that's fine. Let me go ahead and make me the presenter. And what I'll do is just cover the general market screen, monitor 2. I don't want to show both screens. Who knows what I'm showing on my other screen? Let me know when you can see.
I can see it.
All right, so I am ready to go now. Let me hit my stopwatch, and what I'll do is cover the general market here. We had a Success Academy live Q&A call last week. Yeah, it was last week. Yep. And I said we hit a signal that the market would head higher, right? And I was going to place a trade the very next day. I think it was going to be Friday. I didn't place that trade. Why? When I looked at my charts, I didn't get the follow through. So I have a signal saying the market is going to head higher, yet the market is down for 2 days after I made that announcement. I'm not worried about it. I still got the signal. I'm waiting for follow through that signal is going to be accurate. If I never get that follow through, I don't place any trades. See, signals aren't predictions. Signals aren't the law. You know, people are like, oh, the market's going to hit higher, and they get emotionally attached to that. The market's going to hit higher. They make trades no matter what. No, just because you get a signal doesn't mean anything. You wait for the follow through. You wait for that confirmation that that signal is going to be accurate. You wait to listen to the story the stock is telling you. The stock will tell you what it wants to do. Right now, the stock is telling us that, hey, we want to take a rest and go down a couple of days. So I wait. And this is the same kind of movement that's been like this all year. Up, down. Peter talked about it, I think, on the last recap. That volatility is resting. You know, this is just a new environment. So we just have to adapt to that new environment. So the signal is still valid. I'm waiting. I'll give it maybe 5 days, you know, max to wait to see if I get some kind of price follow through. And what I mean by that, I'm waiting for the market to go up, consistently, and then I'll start placing trades again. But as it stands now, I'm still, following the signal and just waiting for that price confirmation, that follow through there. All right. With that being said, I have been profiling a case study in the Success Academy showing people, how to earn, 6 to 10 grand a month. Let's pull up the website. 6 to 10K a month. So I'm doing that case study here, and I have a chance to place another trade live. And so, per that, if you're part of Success Academy, you understand this spreadsheet here. I put in the current price of AT&T here, and I have the 1% above, 3% above, 1% below, 3% below. So I'm going to go ahead and place a couple of more trades on that right now live. They're going to be Buffett trades, Buffett strategies, where we're selling stock insurance. We're pretty much insuring someone else's portfolio. In exchange for that, we're getting paid. We're just like an insurance company. We're selling insurance to other people. And if we have to pay a claim, what that means is we have to buy that stock, and that is okay with me. So usually I do weeklies. I'm doing this on a Monday, so I missed 1 day of time decay. So I'm going to go out to about 11 days here doing these weeklies right here. And for this particular case study, I am able to sell 25 contracts here. I'm going to do about, let me see if it gets filled at 42, shooting in the middle here, so I can get a couple of more cents there. So I'm going to bring in a profit of about $1,000, but since this is 11 days expiration, we have to have that. So it's only going to be about 500 a week, only. So anyway, I'll take that any day. All right. So that trade got filled. So that meant $11,000 just immediately got deposited in my account. Or not 11,000. I wish it was 11,000. $1,000 just immediately got deposited in my account. You can see that here. Okay. Now, as I also explained in my case study videos, which that video has not been released yet, but you'll see that I said I was going to place another trade on that. This is the first one is not a trade, it's an investment. I actually want to own the stock. This next one I'm about to place is going to be a trade. I'm managing it. So I don't want to own the stock with this particular trade. I'm just doing it for income. So I'm going to manage it accordingly, meaning that I'm going to prevent a major loss. This one, I want to go 3% below. I want to give myself some error for the stock to kind of wiggle. And I'm going to go about 32. I'm going to sell some insurance at the 32 price level. And I'm going to go about 32 days out because I'm going so far out of the money. I need to go further out to get premium that's going to be worth my time. Same thing here. I'm going to sell 25 contracts, and let's see how much money this is going to bring in. So this is only going to bring in $625, which isn't much, but it adds to, because I'm a little bit behind on my profit goal to make 6 to 10K a month. So let's reset this real quick, and you will see that now, well, I guess now you'll see these two transactions right here, the 1,000 and the 600. And so that's pretty much the simplicity of trading options. We always talk about clicking buttons and money shows up, and that's it. I know it sounds get rich quick, but that's just the reality of trading options. Do you always make money? No, but we always have a plan for that. So with that, I'm going to end with just recapping my other trades here, giving you the profit or loss. The market actually has been going back down a few days, so my trades some of them are not panning out or making as much money here. So give me a sec. Let me try to find them. They're not showing here. But all right. Oh, okay. Now we're back with the recording. I had to do an edit. I was like, I'm in the wrong account here. So now let me go ahead and review my trades here. So QQQ, even with the market falling a bit, QQQ is still running tight. Still doing as expected. So profit and loss open. So profit and loss so far is 1,200. Of the max profit I have on that trade. Next one is NVDA. I'll show you some losses here. So people are like, oh, you don't ever lose money, but you don't show losing trades. There you go. It's down $3,400. That makes the skeptics happy. Hey, I'm losing money. Kick me while I'm down. But I'm not worried about it because it could always come back. I have several trades in the queue here. This next one that's about to expire in 4 days most likely will lose money. That's okay. I planned for that. I planned for max loss there. And let's see, I have Lowe's. I think Lowe's is up 4 grand. So is evening out. One is down, the other is up. So that's how it plays out. You never know which one is going to be. That is why we focus on risk management, this is a huge secret. It took me many years to learn. Try to keep your risk the same for each stock. You never know which stock is going to take off, which one won't. All right, and Target is down about $400. And so I had to learn that the hard way. You know, I bet $3 grand on a stock that I just knew was going up. That would be the stock that fall. I'd bet $200 on a stock I was kind of nervous about, and it'd take off like 20%. But the money I made on that little $200 investment or $20 investment, whatever it was, wouldn't compensate for the loss I had on that $3,000 investment. So that is my tip for the day. And Peter, unless you have anything else, let me go ahead and stop the screen sharing here. Do you have anything, buddy?
I don't. I really don't. I mean, we covered between our weekly recaps and, you know, for those of you that aren't Success Academy members, unfortunately, you don't get to see some of the other stuff that we talk about, but hopefully this will give you enough influence to, you know, one day join the Success Academy, because it's a good investment towards your future, and you could be doing everything we're doing. But yeah, no, I think you covered everything. And you know what? We talked about it in our webinar that the market, remember we were talking about that, how the market kind of goes up maybe 5 or 6 days, and then it doesn't do that little plateau it used to do. You know, it used to just rest, and if you notice, it's like people panic like within minutes of something happening. Oh,
because they're watching CNBC and tariffs and everything else. So that's why they're listening to the news. That's why they're panicking. I have no clue he's saying today because I haven't looked at it. So anyway, but yeah, you're right. And bless you there, buddy. So I forgot to answer David's question. He asked about the trades. The ones I just showed you, NVDA, QQQ, they're not in my Excel yet. I was traveling when I placed those trades, as Peter and I talked about in the last recap. We demonstrated that. People always talk about trading from the beach, you know, lakeside cabin, all that. We demonstrated that. Trading during hurricanes. I'm traveling, and, you know, that's still brought in with the 26 grand of income. I had a laptop. I didn't have an Excel account. I wasn't at my home base. So those trades are not in the Excel yet. And that's why I was traveling, still earning money anywhere in the world, you know, going through different states. And so that's why they're not in the Excel, but we'll try to get those in there some other time, or either pick up with my current trades. Lastly, as Peter talked about, Success Academy is closed to new members, but we should open up maybe towards the end of the year. You know, it's what my mentor said, pick your heart. It is hard being broke. It is hard it's hard living paycheck to paycheck, but it's equally hard to build wealth. You know, it's not easy. It's, you know, you have to study, you have to implement, you have to have discipline and patience. So my mentor said, pick your heart. You know, it's either one of them is hard. You're either going to be hard struggling financially or hard building wealth. But I like the building wealth hard, because at the end, the rainbow, the pot of gold is much sweeter than living paycheck to paycheck or hitting retirement stressed because you don't have enough to retire. So pick your heart. So with that being said, I will bid you all farewell, and we will see you all on next week's recap. Take care. Bye-bye.